What's good, guys? I want to do a market review for Monday, the 7th of July. Getting back into the swing of making videos, which is nice. So, direct you to the economic calendar. We have no news, no major news. So just keep in mind, 11:30 we had some reports, but not really too relevant. As you can see, barely affected the market. Why was we selling off today? Now, I'm getting into the swing of calling the market before it happens, as I believe that helps me stay accountable and also shows proof to myself I know what is happening within these markets. So I'll direct you to the first message today. Eyeing up this sell side going into AM. Okay, and this is the sell side. I'm kind of looking for a move up, which we've got, and then I'm looking to move lower from this high. This high should not really be touched, and if it does, then we should still see sell side. And obviously this is the high time frame. This sell side right here. This is the daily time frame. This is the 4-hour time frame. So we take out buy side, taking out buy side there to sell side. So I want to keep this video as simple as I can and just really show all you need, because I think bias is very much a simple aspect, but it is confused a lot, and I really want to just clear that up today. So we will refer back to our messages. Following on from this higher time frame analysis, we have a fractal market maker sell model. We take out internal liquidity, meaning we are likely to head for where? IRL. As you can see, obviously the draw on liquidity is this sell side liquidity pool at 22687, and then the fractal market maker sell model, we come up into this internal liquidity pool, which is a prominent high. So we've got one here, and then we've got one here also. We take that out, and the draw on liquidity is still lower here. So from this trade, you wouldn't be targeting this low. You'd be targeting this low right here, because even though the sell side is down here, this is pre-market. This is prior to 9:30. This was taken at 9:01. So if you was to trade, you got to remember, markets don't move in a straight line. We don't just come to here and sell off. So you would not want to be in a trade pre-market and try and hold for this. You can, but that would be silly. You'd be targeting the fractal market maker sell model within this range, treating this leg up as a Judas. What do we take out here? Buy side liquidity. We go from ERL to IRL, and we've taken this gap. So then we can see another fractal market maker model to this low here. So we come up, take liquidity. Where do we go from liquidity to a gap? And then we come up to a gap, target liquidity. I'm kind of going off track, but this is just me referring to this. As we come up to the internal liquidity, we get an SMR pattern meaning your smart money reversal pattern. Shorting to the IRL below. However, this was pre-used IRL, and I'll show you this on the charts. However, this was pre-used IRL, meaning a wick inside of IRL. I use this information as a confirmation for lower prices. Please see hashtag trades for my execution, which I'll show you after this. So this is just a screenshot. We could be recycling this IRL to ERL. So the same logic applied from here to here. With the old photo being this here. Yeah. So it could be recycling this IRL to ERL. Obviously, as you see, this is the high that we take out. Where does it go? To IRL here, ERL, IRL. And what do we then do? We come up to IRL, and then what do we target? ERL. So even though this high is taken out and moves to this low, all we needed to do was just take this, and that was it. That was your TP. As you can see, that is my trade. But same logic applies with everything. Everything this is ERL, IRL. So as you can see, could be recycling this IRL to ERL, M15 IRL to M15 ERL, but within the context of an H4 IRL to H4 ERL, which I'll show you in a second. And then this is the other guys, and then this is a bit later in the day, but same proof. We come up into this IRL, take it, come back into the IRL, move to ERL. It's all the same. Everything is the same. And then the daily target, remembering that this move, we stop here. Because we're so close, we're about 20 points away. Either we see another move into IRL and then target the low and then run it out lower, or we just carry on. So yeah, ideally this is SMT is fake. I know a lot of the guys saw this as bullish SMT. Ideally this SMT is fake. Fake SMT due to the daily bias drawing lower, which is still this red line that has not been tagged yet. And then as you can see, we finally get our move to the daily target. And there it is, daily sell side bagged and tagged. Perfect day of execution, take reading using daily bias. And you'll also notice how we react to this level multiple times, not only just when we tap it, but also when we're below it. So I'll show you the charts. Now, the clip before this will just be a sped up version of my execution, which I can show you here. This is the execution video of me getting in. So I'll just speed this up, put a little bit of audio over it, and then you'll be seeing this market review after. Just because I know that this draws a bit more attention than the... Okay, my recording's gone. Than everything else. But we'll get into the charts. So I do want to mention the reason this may have been harder for CME data is, as you know, we didn't have a Friday candle. Even though we had a print, we had a bank holiday, meaning there was no print on the CME. So it goes Thursday to Monday, meaning if you purely traded CME, you would not be able to see the levels I was using and the logic I was using for daily bias. But I'll show you on, we'll just do it on the plain chart. It's obviously not the same, but same logic. Actually, I'll just do it on here, it's fine. And it's disconnected me, brilliant. There we go. Okay, so what have we done? Now, I'll just put this all hidden. Hide this all. Okay, so what have we done? Let's think about it. Taking our all-time highs. Okay, now when you're at all-time highs, there is not a bias. Okay, there is no bias at all-time highs. All you can do is, let's say this candle trades to all-time highs. The next day, as we open up lower, the only target is this high. We open up the next day, you want to buy inside the lower wick and target this high. Now let's say that overnight we buy up here and London takes out the high. What does this mean coming into AM? You don't have a trade. You don't have a bias here. Because if your daily objectives has been taken, there is no bias on the daily candle. Now, this is what I spent a lot of time confusing. Actually, before I ran into that, same logic. This doesn't even have a lower wick. So, as soon as you take this high out, there's no bias. However, actually, I'll get into that after, but this is where I've been confused for a long period of time. Spent a lot of time wasted in bias. If you want to know where the daily candle is expanding, you look at the daily time frame. There is nothing else to it. That's it. Where the daily candle is expanding is taught on the daily time frame. That's it. That's all it is. If you want to know where the next hourly candle is heading, you look on the hourly time frame. Simple, right? Now, this is kind of an all-in-one lecture. Kind of. Don't want to make it too advanced. I did want to keep it simple, and I've somehow gone on a bit of a tangent. But a couple of key points I have mentioned. Hopefully, if you haven't binged watched the video, hopefully you have the ability to go back and try and find the gems, because there has been a couple in here. So regardless, okay, we're at all-time highs. There's no target other than the previous day high. Previous day high. Previous day high. And then as soon as Monday closes, how can we use bias? Okay. What do we now have? Okay, I know we've got this, but we also have this. So as soon as we print this gap, knowing we're at all-time highs, and this is just for general knowledge anyways, because we know the market moves from IRL to ERL. Or it moves from ERL 2. I know it's a bit ugly drawing. Or move from ERL to IRL. That is it. That's all the market does. And if it's not clear where we're going, then we shouldn't be trading. So here, especially at all-time highs, there is no IRL. You could be bearish to here, but when you're at all-time highs, you would not want to try and catch sells unless there's a reason. And I know that there is technically a reason to be bearish here to this gap. With Thursday, you could be bearish. However, if we're all-time highs, we're gonna pump. That is kind of key here. So as soon as we then start printing smaller gaps, like this gap here, this is the only gap here, okay? So if this is the only gap and we're clearly not trading into it, yes, you could be bearish on Thursday. Going into Thursday, you could be targeting this, you would have lost. Or you would have caught a fractal sell either just here, sell to the bottom. You may have been able to do that, but you would have likely caught a loss. This is the only gap in this leg. So what do we call this? A breakaway gap. The next gap after, which is a smaller gap, is more likely to then be used. So this is just purely a breakaway gap. So maybe on Thursday, you would have lost if you did short. But yeah, as we come up, we now know this is a breakaway gap. We've got a new gap, and here as well. We did not form this gap until Monday's open. So you could have been bearish on Monday and you would have just lost again because we didn't even have a lower wick inside of this. So using the logic of we'd probably move to IRL is you would have just lost here. There was no wick blower. We didn't come anywhere into this candle. So yeah, it is unnatural at all-time highs. However, it's all good, and that's just, you would have lost on Thursday, you lost on Monday. However, on Tuesday, what do we have? We have sells into this gap. So you could have sold the high or somewhere around the high. If you'd have known that the draw on liquidity was this gap, you could have been catching fractal sells. Now, as soon as we reach this level is when there is no bias, because we could reverse, we could go lower. We just miss this gap. I think on CME also we missed this gap. ES is the way weaker pair in this market. We took all-time highs on NAS way sooner than ES. As you can see, we only just took all-time highs on the Friday. Probably hence the real bullishness, but yeah. We come in, we've got this gap, same logic, ERL to IRL, and we can short until this level is met. Now I do wonder if there's SMT, and there is. No, there's not. There's no SMT on the highs, so wait, am I bugging out? Yeah, there's no SMT on the highs. But using the ERL to IRL logic, you would have been happily selling inside here. Now that would have been a win. Okay, this would have, let's say this is a 1 hour loss, and then this is a 1 hour loss. Here, let's say you make 3 hour, that's both of these days recovered, and also profit. Now, once we are in IRL, we can then begin to look for the move back to the ERL. So obviously we don't take it, but that does not mean that you would not be able to get a buy inside of here. Now, even more confluence. What do? We open lower, take up sell side inside of this gap. So I would prioritize this gap as the higher time frame ERL IRL cycle. However, you could also have viewed this as ERL to IRL and targeted a gap inside this candle or inside one of these candles. So it is very fractal. We are looking at the daily time frame, but yeah, due to the liquidity sweep, could have either targeted a gap inside this candle or a gap on the prior move, or you could have targeted some side of buy side liquidity due to us having this IRL to ERL move. So the same logic applies for lower down. I'll delete these drawings. What do? Take out buy side. Okay. So Thursday completes the fractal buy model. This would be the sell model into the gap, and then the buy model out of the gap. Still nice MT on the highs, but yeah. So here, Friday, you'd have likely had no daily bias. However, you could have used a 4-hour and a hourly time frame as your daily bias time frame. So this isn't just me saying, this is me classing that if you only used the daily candle on the Thursday, you would have lost because we didn't come to the daily objective here. However, if you then looked on the 4-hour, knowing there's no real daily bias, you could have shorted to a 4-hour gap. But like I said, this is all-time high trading, so you don't want to be too caught up. But if there's no daily bias, just like there is none on Thursday, well, there is a daily bias, but it doesn't get met. Likely that we took the high first. But yeah, I'm kind of making it a bit too advanced. I don't want to make this advanced. I just want you to focus on ERL to IRL, IRL to ERL, daily, time frame. If nothing clear on daily, use H4 or H1. That's what we need to focus on. But here, take out the buy side. Obviously on Friday there's no daily bias as there's no gap. So you'd be using the 4-hour as your bias. If we took out some sort of buy side in this top wick, then we could short to IRL, ERL, IRL. Or if we tapped a gap inside of this wick, we could then short until ERL. So it's very fractal, but we're just using the daily time frame. So here, what do? Monday. What have we got coming into Monday? Now this is where I referred back to my point of eyeing up this sell side going to AM session. So we know the market doesn't move in straight lines. It moves in fractal market maker buy models and sell models. Everything you see is a market maker buy model, sell model. This could have called sells. This could have called buys. It is all opportunities. But on Monday it was pretty clear. Had this gap lower. And this top wick from Asian and the overnight session tapped into a 4-hour IRL. Now, knowing that this is fractal, you can see why I had this bias. So what do we do? Now this is our draw on liquidity. Gets met obviously, but what was the time of me sharing this? 7:38. So a couple of hours before. However, we did make this drawing overnight. There is obviously no proof in this, but so the same logic would apply. If this is technically ERL, because it's a low, we're not just going to dump to it. We're going to move in fractal models. So let's say this is the high, this is the low. If we want to get back to this low, which is the daily target, what are we going to have to do? We're going to have to rebalance to what? IRL. Because to get to ERL, you have to go to IRL first. Does that make sense? So if this is your targeting, and remember that if you're targeting a gap, this is also an ERL target also. So to get there, you need to see an IRL move. So this is why I was so confident in this being our kind of protected high. I wasn't really caring if it was a protected high, but I knew that in order for us to move to the ERL target, we would have to seek some type of IRL first, which we did. So this move, you could have found a long to IRL. Obviously, we take out sell side here. I know this is Friday, but and this is overnight where we tap it. But if this wasn't overnight, technically you could have seen sell side swept, and then used the logic of if we want to come back to this low, we've got to go up to IRL, so you can buy to here and sell off back. Obviously this is 4 hour candles, so unless you're a swing, you're not going to be trading this. But if you're confident, obviously you could have just shorted, put the stop at the high after, targeted. This is all hindsight, obviously. Could have come up, but this was the last gap, last IRL in the 4 hour leg. I like the 4 hour, it's quite clean. And then the same logic would apply fractally, which is how we got our trade. So the daily, we had technically an ERL and an IRL target, but on the 4 hour, it looks more of a ERL target because we've got 2 equal lows. So if we want to get to these 2 equal lows, we've got to come up to this IRL, anticipating the move higher before selling back. Now, obviously, we know it's fractal. Gaps are formed technically IRL, but they are also ERL if you look at it with both perspectives. But the logic of this move happening was very high probability. And we just simply used this as a turtle soup for this candle, and then we also came up again and souped another. So in here, what have we got? ERL taken. What can we target? IRL. Now, what happens when we come to this IRL? We go to ERL. What happens when we go to ERL? We go back to IRL, which is also here. So you see how this is the only way the market moves. But yeah, that was the logic. We can delete this now. So how do we get our trade? Now I do want to show you what I meant by it was a mitigated IRL target, hence why we could go lower. I will just show you this here. As we come up to the internal liquidity, we get an SMR pattern. However, this was pre-used, meaning a wick inside the IRL. And usually we want to target a fresh, unmitigated. So the IRL that I was looking at was, as we came to this ERL, I was looking at this here. Now obviously we've already used this, so I'd be targeting the unmitigated part of this gap here. And if I show you now on the M1 time frame, as we came into this high. I can kind of put the markings back on now, so I don't actually need this or this. There we go. As we come into this high, we get the SMR pattern. You could have shorted this gap or anywhere inside of this leg. We obviously came to OTU there and sold off targeting this gap. However, like I was showing you, it was a pre-used gap, meaning we'll probably want to target a fresh gap. So you can see the same drawings. This gap is here, but I just marked up the unmitigated part, meaning the unfilled part, and then I saw a fresh M15 gap below. So this is where I say I use this information as confirmation for lower prices. So then I actually executed this trade, which is what you would have seen at the beginning. So as we meet the target, obviously it's not a complete target as it is unmitigated. As it's mitigated, so we want to target an unmitigated area. So as we drop lower, we take out this sell side liquidity and this sell side liquidity. Where we're going to go, if you want to return back to this low, we're going to go back up to IRL. And then where would we go from IRL to ERL, this low? But then also our target, because we're using it fractally. This sell model from ERL to IRL has not been complete until we get to a fresh gap. So technically this move was not complete yet, meaning this IRL to ERL also covered the IRL final target, which is what I said here within the context of 4-hour IRL era, and that is actually further down the line. So obviously we still haven't met the daily target, which is this level here. So what do we then do? If we want to get down here, we need to come back up to IRL to then move to ERL, which we do perfectly. We come up into IRL and then we move lower. If we want to return back to this low, and the reason we would want to return back to this low is why? Because if we want to return back to this low, we have to go higher first, meaning we need to come up to IRL. So we move up, generating liquidity, come up into IRL, which I believe is a 15-minute, maybe an hourly also. Yeah, 15-minute here and also 15-minute there. So we come up, get SMT on it, even higher confluence, as you can see. And then where do we go? Back to ERL. Now the target is still not met, so we're still recycling the same logic. If we want to return to lower prices, where do we need to go first? We need to go back up to IRL. So this is an ERL target. We've still got a target lower, so if we want to return back to this low and make a new low, which we should, because daily target is not met, we then need to go back up to IRL, which we do. We go up, come back down, go back up, same logic. Once we are in this IRL, we then come back down to the low that is connected to this move and also this low here. Now this is where I showed that image of completing that model and said ideally we want to complete this move as we've finished the sell model now. Either we come back up to an IRL, iron up this and this to then go back lower, or we just run to it and we just ran to it. Now this is technically a previous day low, So you can see how we wick it and reverse straight off it. Now you could have even had this as just a trade on its own. Previous day low, inverse this gap. We close above this high. Could have been buying up to here. Now where are we going to go? What is this? This is technically ERL on the daily as it's a previous day low. So where are we going to return to? IRL. Now you can target this gap, any gap that is an IRL target, ideally in premium if you're buying in discount, and we go up. Now as soon as we tap here, where do we return to? IRL to ERL, this low. Now what you'll see is this repeats everywhere, but something else that is very random, once we get below it properly, we sell off really below it, not just come bit down and accumulate, we get really down below it. Look how these candles do not go back above the old low. This has to be random, right? This is the most algorithmic day I have seen, because I've recently been working on a daily bias method, but it must be random, right? Look at this, how we just sell off it. It doesn't go above it after we properly sell off it. This is so algorithmic. So yeah, hopefully that covered the day. I know it was a lot. I'm going to delete these now, and I'm going to show just this level, just how beautiful it is. I'll show it in the 1 minute as well. Beautiful, absolutely beautiful. But yeah, so what am I looking for tomorrow? Now obviously we've moved from IRL, inside of IRL now. Okay, so where we've technically inversed this, it's kind of harder to give a bias, as we haven't respected it, meaning we could definitely sell. Let me take off executions. We could most definitely sell into here, but you'd also want to just use like a 4 hour for your bias. Now we've got a gap down here, so the same logic would then apply. IRL to ERL. Now it doesn't mean we need to go all the way up, however this would then make the daily a bit more refined, as obviously there is no other gaps in this leg. Obviously we sold to the gap today, as it was very obvious. We're obviously already in this gap here, so either we want to sell to like a lower gap, or we then just want to buy up to this ERL from it, and it's all fractal, so like you could even use this ERL, sorry, but yeah, So coming to the day, the daily bias isn't as clear because we've inversed it. We could be selling off to this weekly gap, but the daily, we inverse the gap. We are in this order block and this 4-hour gap here. So either we sell to this low, you can catch shells to the low using the inverse logic, and that we want a deeper retracement, maybe to that weekly level, or you could potentially start seeing moves to ERL targets. Now this doesn't mean that from this low we're then going to sell off to the high, buy off to this high. Of course that doesn't mean that. It just means if we're in this gap, we're going to want to return to ERL, right? Then if we've taken out this, we want to return to IRL. Then if we've taken out IRL, we want to return to this ERL. Then if we take out this ERL, we want to return to this IRL. Then if we take out this IRL, we then want to return to this ERL, and then want to turn to, and then it's the same. So you will never see a straight line. We won't just buy straight off this, but there will be opportunity to capture every move you could imagine. But yeah, I think either we sell off to previous day low, or we buy up. And if you think about it, CRT is just IRL to ERL. When it's aligned, it works. When daily bias is aligned, it works. So I'll think of an example of when it would not work. Actually, no, when it would work. So let's say this is a previous day. No. Let's kind of make this. Kind of yapping now, but okay. Right. Okay, so I'll just keep it simple. Okay. So let's say we've classed this as a CRT. We want to sell off to this gap. And we class this as our CRT high. We soup it and we can sell off the soup. I know it's a bit of a crap drawing, but it would be a lot more like up there because it would be on the daily time frame. So let's just say we're at a 3R to there, right? Great. If we've taken out some type of ERL, whether that be high time frame or just this one here, we could then anticipate CRT would be valid as we've got a gap lower. However, it would not work if we then saw something like this CRT within this gap, and then we tried to sell off. Now, why would this not work? Because we're in IRL, meaning we're high probability to go back up to this high at some point. So what would be the better CRT? This CRT inside the IRL. That makes sense. And then we're going to return. Now it's not going to look like this. It will look more like this type thing. But if you are in IRL, you would not want to look for sells within the higher time frame context. So yeah, I've kind of yapped, but we'll see if this 4-hour provides a move back to these highs, or if we do want to sell off lower to this sell side liquidity pull. So yeah, that was a market review and a bit of a lecture. Maybe I'll make this its own video, and I'll just post the execution as its own. I think I may just post this as an advanced lecture and then post the execution video as a separate video, so like a part 1 and then a part 2 of the market review. Yeah, thank you guys for watching, and peace.